Thank you
Sure thing.
everyone for joining this session. My name is Noor. I'm from the Asian Development Bank. In terms of format for the session, we've got 30 minutes today, so it's a short, fairly short session. We're going to keep it quick and sweet. I'm going to first talk about ADB's investment framework and share a case study of one of our recent investments in India, and then I will hand it over to my colleague Subhadeep from Omnivore Ventures. In the end, we might have a few minutes to take questions. So with that, let me just kick off. I hope everyone can see the slide. So I represent the private sector department of the Asian Development Bank, and I work on the food and agri business side of the private sector team. I'll quickly explain how we are structured in the next two slides. So on the private sector side, what does ADB look at when investing in a company? There are four essential themes that are important to us. Nutrition. So is our investment fulfilling the nutrition needs of the population? That's an important question that we ask. Is our investment benefiting farmers, especially smallholder farmers? Is it improving their livelihoods? Is our investment environmentally friendly and environmentally sustainable? And is it contributing to broader economic development? So these are four essential themes that are relevant to an ADB investment. Now, in terms of ADB's overall portfolio, obviously a lot of people are familiar with ADB's work on the sovereign side, and that's because of the sheer volume that goes on the sovereign side. We deploy roughly between $25 and $30 billion a year with member countries on the sovereign side. On the non-sovereign side, or which is called the private sector side of ADB, where we invest in companies, we deploy roughly between $2 and $4 billion a year. Now, historically, ADB's focus has been infrastructure and finance, and you'd see bulk of our capital historically has gone into these two sectors. But agriculture is a fast emerging and strategically important vertical for us on the private sector side, because you can't think about development in our member countries in Asia without intervention on the agriculture side. So it's a very important sector, though small in numbers, but over the last 5 years we've seen a gradual increase, and there's investment in the team to further accelerate investment in the agriculture side. The fourth vertical is health and education, which is another vertical newer for ADB, but it's an area of increasing focus for the bank. Now, where do we invest in the food and agribusiness value chain? ADB can virtually invest across the value chain. We have invested in input companies, farming businesses, greenhouses. We've invested in processing, and then retail and food brands. From a strategy perspective, we like downstream businesses more than upstream businesses, but we're not averse to investing in upstream businesses as long as the commercials are compelling and there's a compelling enough development impact. We obviously like vertically integrated players that cut across the value chain because these business models tend to be more resilient, not only from a commercial perspective, but also from a impact perspective. And what I mean by vertically integrated is touching the farmer on one end and then touching the consumer on the other, and owning the entire value chain in between. There are no major exclusions in the agribusiness value chain where ADB can't invest, except if there are environmental issues associated with the value chain. So, for instance, palm oil becomes a stumbling block because of the deforestation issues, etc. Now, what does ADB bring to the table as an investor? We're not just another investor. We're a long-term strategic partner for businesses that we invest in. We can be flexible with our structuring to stagger repayments in a manner that suits the cash flows of a business. We can be quite competitive with our pricing because we're a AAA rated institution. We're able to raise money much more competitively than some of the other lenders out there. But I think it's important to emphasize that we do not undercut the market. Our objective is not to undercut the market, but to complement the market. So we expect ADB to be competitive on pricing. And then local currency financing across our member countries. With most of our member countries, we have the option of local currency financing as well as hard currency financing. And it's quite useful for companies that are looking for expansion capital and might need local currency, for instance, for expanding in the local market, and then dollar financing to finance expansion. In India, certainly we have the option of local currency financing available. We can also help our companies mobilize additional financing, both commercial as well as donor co-financing. We're able to leverage our network of investors, international investors, to help our companies raise additional capital. And then last but not the least, ADB's investment is a huge stamp of approval for a business, not only for its commercial credentials, but also for its development impact credentials, which can open up a lot of doors for additional partnerships and financing. Now, what are the products for ADB's investment? We're quite flexible in terms of the investment products that we can use. We can do, regular debt financing. We can do equity. We can do quasi structures. So we're quite flexible in terms of the financing instrument that we're able to use. We're also able to bundle our investment with a small amount of donor financing or technical assistance, which is grant money, which can go towards a specific capacity building initiative for the company. In terms of ticket size, our investment typically ranges from $5 million to about $50 million. We have done bigger tickets as well in the $100 million bracket. And we have also done at least one transaction that is smaller than 5 million. But, our sweet spot would be anywhere between $15 and $30 million from a ticket size perspective. ADB's bread and butter is debt financing. That's what historically ADB has been doing. We have also done equity along the way, but in terms of mixed debt portfolio is certainly much bigger than equity. We are in the process of further strengthening our internal equity team to be able to do more equity work in the market, but we have flexibility to do both. In terms of tenor, again, we can do short tenor financing, 2 to 3 years, as well as long tenor, 7 to 9 or 10 years. For infra, we can do even longer. Agribusiness, typically for capex financing, it ends up being 5 to 7 year financing. So quite flexible there. In terms of process, end-to-end, one can expect a 4 to 6 month process from initial appraisal to final approval and financial close, and really depends on how prepared the client is with all the information that is required, which essentially includes historical financials, a clear business plan, and then articulation of where ADB money will be used, and then there's a diligence process that gets underway. The ADB's diligence process is intense. It not only covers commercial due diligence, but also environmental and social diligence is quite important, and sometimes clients who have not worked with DFIs or IFIs before, the ENS diligence is a new new thing that they come across. So one should, I think, ADB financing requires a bit of homework and a very extensive engagement process to get it going. Once you have one round of ADB financing, successive rounds of financing can be much easier, and diligence can be lighter. Now, quickly coming to the case study. So ADB invested in Suguna Foods Private Limited. It's one of the largest poultry company in India, and it was interesting that poultry was a big victim of one of the industries that got a big hit because of COVID-19, as people thought that chickens might be carriers of COVID, and demand plummeted in a big way in March, April, May this year. We were already in discussions with the company to support their financing needs over the next couple of years, and the financing needs shifted as COVID hit. So we had to relook at the opportunity, and we went in to provide $15 million working capital financing to the company to basically ride through this rough patch. And for us, the analysis was simple. Although the industry had been badly hit, we still saw poultry as being quite critical to the nutrition needs of the population. Also, poultry is a huge employer of rural smallholder farmers. So for us, the development impact was pretty strong, as well as the commercial story. We anticipated demand to come back after the temporary blip, because there was no scientific linkage between COVID and poultry. So both the commercial as well as the development story was strong enough, and we stepped in along with a few other lenders to support the company. So it's just one example of the kind of financing that ADB has done, especially in these pressing times. And we continue to look for opportunities to support food and agribusiness companies that might have been affected as a result of COVID, but are otherwise have sound fundamentals and project strong growth stories over the next 5 to 10 years. With that, I'd conclude and say if there's any food and agribusiness company looking for financing out there, we would love to speak to them and understand their needs. What is essential for us is a good track record of commercial performance and a strong development impact baked into the business model, not a CSR added to the business. With that, I would hand it over to my colleague, Subhadeep. Subhadeep, over to you.
Thanks so much, Noor. Let me try and share my screen and just give me a heads up if you can see it. Yeah. Is this visible?
Yep, I see it.
Awesome. All right.
Yes.
All right, give me a second. Okay, great. So hi, everyone. This is Subhadeep. I represent Omnivore. We are India-focused venture capital fund exclusively focused on agri-tech, which basically means we're more focused on technologies which can be used in agribusiness, and helping entrepreneurs who are basically trying to solve problems in our agricultural and food systems in India. Just to give you, give people in the audience a context of the agricultural economy in India. So we are 1.3 billion people fed, and the food that we consume is largely grown by 130 million farmers, right? So it goes without saying that these are all smallholder farmers, and massive fragmentation issues exist. So there are a lot of parallels that we draw between India and a lot of sub-Saharan African countries and Southeast Asian countries as well. That said, we do as a country rank amongst the top producers in a lot of commodities, some of which are mentioned here. But there are challenges, as this session is supposed to highlight, that when we're talking about fragmented land holdings, there is typically a challenge of applying technology at a grand scale, which basically means that there needs to be focused kind of enterprise activity trying to solve and build solutions for the smallholders. As Noor rightly mentioned, one of the examples of that is Suguna. Um, you know, what we kind of like to think about the whole Indian ag space is this, right? There are upstream activities which includes farm inputs, and there are farming activities. Midstream, there is a lot of storage and trading involved, and processing involved, and downstream activities, of course, is slightly more organized in the country. The interesting thing in India, though, is that you will find that there are large homegrown companies in each of these segments, right? So whether you're talking about seeds and agrochemicals or tractors, you'll find the top one of the top 5 companies in agrochemicals, UPL, being from India. The largest tractor manufacturer in the world, Mahindra, is from India. And similarly in every segment, and I think Suguna finds mentioned right here as well, it is one of the largest poultry companies in the country. Similarly, for every single, despite its fragmentation, despite its innate smallholder nature, Indian agribusiness has effectively grown over the last 20, 30, 40 years, right? Particularly in the last 20 years has been the rise of the modern trade and organized retail as well. So what are we really talking about then, right? If everything is organized, I think what we think as Omnivore is that the link which is missing today is that innovation largely does not really happen in large corporates, right? And that is where startups play an extremely important role, right? These are companies which are used to pivot, they're used to iterate very frequently, they're building on technologies which are not present in agriculture, right? So think about digitization. If you think about digitizing 130 million farmers, that unlocks a massive economic opportunity as well, right? And that is precisely what I think as Omnivore we wanted to catalyze when we started 10 years ago as a fund. And I think 10 years down the line, we're running our second fund right now, and deploying from that, we have 25 odd investments. And we can say that yes, there is now enough activity in the Indian startup space, in the Indian agri-tech startup space as well, that there are companies which have now gone to a certain scale, and I'll probably talk about one of them later on in the deck, which basically gives us a hint that if more capital does follow, and that is happening in the last 2 years, we will see a lot of disruption, a lot of efficiency coming in, and that is basically why we think that India also is a very interesting use case and is largely a smallholder farmer's laboratory, right? So whatever can work in India for the smallholder, the ability for these companies to go out and solve for similar problems in other regions, of the world, does exist. So whether it's being or having frugal engineering talent, doing small scale mechanization, or very lean IT, which leads to digitization, I think we have it all in the country. Now, what do we believe at Omnivore? Just to give you guys a sense of what we do, we think that our fundamental theory of change relies on the following 3 tenets. What we want to invest behind are technologies which can help in increasing smallholder farmer profitability, which can enhance smallholder farmer resilience, and which can improve agricultural sustainability. Now, whether it is anything to do with raising farm yields, or providing risk mitigation through innovative financing, insurance, or whether it's reducing consumption of natural resources, because we all understand agriculture is a massive consumer of natural resources, and we need to be more efficient with that. I think all of these basically fit the bill for us when we come to investments. If we further break it down into themes that Omnivore invests in, these are kind of 9 blocks, or segments as we call them. So we are actively investing in farmer platforms, whether they are farmer input platforms or they're helping farmers link with information, link with markets. We strongly believe in the theme of rural fintech as well, whether it is credit, whether it's insurance. Agribusiness SaaS, which is more enterprise SaaS focused on agriculture, precision agriculture, trying to do variable rate or doing precision farming at a smallholder level, at a smallholder cost. B2B agri marketplaces, this is where I think there's a massive amount of inefficiency today in a country like ours. And we're talking about a $350 billion agri economy, so which is not trivial in size. And then I think a lot of options exist in terms of opportunity sets there. Certain farm to consumer brands, which are basically moving directly from the farmer to the end consumer and trying to build a conscious brand there. Agri biotech, that's something which we are keen to kind of invest in. We haven't done anything so far in the last 10 years, largely because I think we are still yet to come across something fundamentally disruptive from a tech perspective. But we have our eyes open, and if there's anyone out there who thinks they want to build something here, do reach out to us. And similarly, post-harvest is a massive space for us in terms of investment interest. What we kind of bring to the table as a fund is that we're your first investment partner. We're typically fairly early stage, which means that if you're raising a seed round or a pre-series A round, that is when we will come in with a first check of anywhere between $1 million to $2 million. We can also lead. We are happy to co-invest with other investors, and we keep significant follow-ons for backing the companies that we invest in their future financing rounds. So we are an equity investor, right? We don't do credit. We're a pure equity investor. And otherwise, right from being a soundboard to our entrepreneurs, to helping them out in specific functions, we pretty much perform different tasks for different companies, right, as they grow, and we advise them through their growth. And at a fund level, of course, fiduciary responsibility is towards our investors, so we do have to exit. And I think that is where we see the ecosystem also playing a strong role as more and more investors come in, and ADB, of course, is one such investor, and there'll be more. I think the whole ecosystem kind of benefits. Investors will find exits, and they'll reinvest again in a lot of startups as well, which in turn will help farmers actually make more money, right? Which is the goal. Largely aligned with the following SDGs in terms of our actions, whether it's responsible consumption or climate, clean water sanitation, or zero hunger. Quickly spend a minute on one of our stellar portfolio companies called Dehat. So Dehat is a tech-led platform, farmer platform, which offers full stack services, end-to-end services for farmers, right? Whether it's right from seed to market, as they call it. So access to high quality agricultural inputs, seeds, fertilizers, agrochemicals, tools, customized plot level farm advisory, which uses a lot of satellite data and a lot of intelligence on the ground. Access to financial services, which is something they've recently started, credit and insurance, and also providing market linkages to smallholder farmers for helping them sell their produce to organized buyers. Now, it sounds pretty simple, but to do that all in an efficient manner, so that all parties find value and make money, has been an immensely, I would say, commendable job done by the team there. And this is also focused on one of the more, kind of smaller farmer-focused areas of India, in the eastern part of the country, where landholdings are even smaller than I described. So this is largely an online marketplace backed by a massive micro-entrepreneur network today of more than 1,000 people, and over 400,000 farmers use Dehat's services every single day, every single season. And they're growing at a massive clip in terms of, they're growing more than 3x year on year at a significant base also today. And as we speak, we're closing on the financing round for this company, and we have no doubt that more such models and more such startups will really emerge here. Just to kind of zoom back up and look at why agri-tech, and why we kind of think this is a very interesting space. We spoke about the relevance for India, the need there, and the kind of potential. Globally, if you see the last few years, there's just been a direct correlation of how funding and private sector funding, which is largely PEs, VCs, have really invested behind the whole agri and food landscape, over the last few years, with last year just being close to $20 billion invested across, upstream and downstream food and agri technology startups. And along with investments, we've also seen the whole ecosystem, which I spoke about, growing and also providing, large enough exits, whether we talk about a Granular or a Blue River, which got acquired by John Deere, or Climate Corporation, for that matter. So across every single segment, there have been notable financial exits. So I think it's a great space for entrepreneurs to be. It's a great space for investors to be in as well. And we hope that we can do more. And very, very, thank you again for your time. If any one of you guys want to reach out to us, we're accessible on our website or at info@omnivore.vc. And with that, I'd kind of, stop the presentation bit, and with a very limited time, open it up for questions any one of you may have for either me or Noor here.
Pradeep, I
And
have
I
a question
think
for you.
there is,
I have a question for you.
sure,
Let me start. Are you seeing ag tech
sure.
companies from India expanding and going overseas? Are you seeing that happen? And is Omnivore financing that as well or not?
Absolutely, absolutely, we are. In fact, that is the reason why we had that smallholder lab slide out there. Mm, Typically, after the second year of operations or the third year of operations, they do either get strong inbounds or they look out on their own. So within our portfolio of 26 agri-tech companies, most of which are quite early, I would still say that more than 50% have operations outside India as well. I'll give you an example. Eruvaka, which is for aquaculture. It's an aquaculture IoT platform, gets more than 70% of their business from Ecuador, right? And they're entering Vietnam right now. AquaConnect, which is another shrimp platform, a full stack platform for shrimp farmers, is moving into Vietnam and Indonesia as well. So pretty much, yes. I think Stellabs has a European subsidiary and serves Africa as well, Nepal. So I think that cross-pollination has started to happen with EcoZen, which makes solar-powered cold storages. It's pretty much there in Kenya. It's there in Vietnam, Philippines as well. So Afghanistan as well. So we've kind of seen some early signals of how technology can become robust in a market like India and then be relevant for stakeholders in a lot of other geographies.
Great, thanks.
Thanks for the question. Yeah. So, all right. Is there?
I think there are a couple for you in the chat box.
Yes, I'm just looking at this. There's a question by Yari Matero. Subhadeep, how do you identify the ag tech winners in the market? I think for us, are at the stage at where we come in, it's largely about the team, because you're so early that you don't have a very strong set business model. There are a lot of variables. So for us, it's about the team's experience, their knowledge, the time they've spent, and their insights on how they will attack a problem. I think that is what is the most important factor when we evaluate deals. Of course, the size of the opportunity, is it over-regulated or not? Those are considerations as well. But I think the fundamental crux becomes the team, followed by, of course, if there are financial metrics available, and if it's a company which has been there for 2, 3, 4 years, then we also look at numbers. But otherwise, it's the team, which is actually the first point of, and also our job is largely to prophesize the future, right? Because we're trying to catch the wave as VCs, right? So what will become more relevant 5 years later is what we need to plan for and look out for today. So I guess that is how you really look out. Tejas, any tips on how to reach out to ground level farmers for getting to know their pain points? I think today, Tejas, there are a lot of options. if you can't reach out to farmers through the usual networks of either visit mandis where farmers come, you can visit agri retail shops where they come, you can connect with FPOs where they're largely involved. You could also probably just intern with a bunch of agri-tech startups who are conversing with farmers day in day out. So that is, I think, with digitization, with mobile phones becoming more and more common, and farmers also on various platforms as well as social media platforms, I don't think access to farmers remains a challenge. It is difficult. Let me not make it all rosy. It is difficult, especially when you have that 130 million number at the front of your head. It is difficult, but it's entirely possible. There are partnerships you can form.
Great.
Cool.
I think we're out of time
We're
now.
out
So
of time. Yes.
thank you everyone for joining the session. I think great conversation, and feel free to reach out to myself or Subhadeep, as the case might be, for any opportunities for a
Any
partner.
opportunities. Yeah.
Thank
Thanks
you.
again, everyone. See you.
Thank you. Bye bye.
Bye bye.